And today webinar is actually requested by many people and wanting to understand more about cryptocurrencies. And of course, it's not really that great, right? We all know what's going on with the market right now. And the losses on people's book are really is an issue. If you are running at a capital gain and a capital loss method, and you can only do $3,000 deduction for the losses, and we have people, the biggest number I saw right now for the clients I work with, the losses is capital gain and capital losses is over $2.5 million. So it is a lot. If you can only deduct $3,000 a year, you can imagine how long you have to live to get that deducted, right? It's just not even practical, not even right. So let's get going with the talk about cryptocurrency. I'm actually, if at the end of the webinar, I want to do any conclusions and I'm talking about things like my insight, I'm actually thinking that maybe it is time for those well-doing small business owners to look at investing on stock market or investing in cryptocurrency. But I will further explain that, folks, and just follow me, okay? And tax accounting is like swimming. It is almost like your life skills you must have. I don't need you to graduate from bachelor's degree, master degree, CPAs, all these designations. No, don't worry about those. We just want you to understand tax accounting from your standpoint and understand the layman language related to these and knows what means increase and decrease. That wouldn't be too hard, right? Today, we're going to talk about that exclusively and how that cryptocurrency work into tax and accounting. Before that is me. My name is Ying, and a couple of you are new. Welcome to Community CPA's webinar time at 3 p.m. And I serve on National Taxpayer Advocacy Panel. It is Federal Advisory Committee for IRS, okay? Long story short, and this committee is really helping to elevate grassroots input to IRS so IRS can be a better tax agency and can collect money from us and also don't make us mad. Does that make sense? So it's a great idea of IRS to improve IRS. So my emails is right there and you can write to me and I will go through the channel and submit information and IRS will come through and doing good things for the taxpayer. Internet knowledge is garbage. I mean, I say that want to be extreme just because folks, you cannot rely on the internet to be your teacher, okay? And the Community CPA has this free site and we like to teach you, we do that for free, but that doesn't mean the word we say is authoritative and we are not, IRS is, right? The government is. So our job is interpreting what the government says. And there are, in the process of doing the interpretation, sometimes, just like different languages and you are not to the point, you may be interpreting it incorrectly. And I want to say that we don't interpret things incorrectly, but what can I can't guarantee that not even ex-President Trump can do everything correctly. So, nobody can do anything correctly, 100%. So make sure you take your responsibilities. It is one of the slides. Our corporate attorney would not let me wipe it out. And it has to be here and it has to be talked about. All right, now let's talk about cryptocurrency. And I kind of want, this slide is kind of a theory, right? And, English is my second language. A lot of times, the English word doesn't really do much to my understanding. I remember for the longest time, I don't understand the word of equity because, I was born in a communist country. There's no such a concept in language called equity. So I grew up for 19 and I don't understand equity. So when you start doing English and then learning at the English school at York University, that's where I graduated from accounting degree, equity was so hard. So cryptocurrency is so hard for a lot of people. They understand the currency, they understand crypto, and they don't understand what cryptocurrency is. So what I want to give you a very simplified version of Chinglish and about cryptocurrency. It is a transaction that framed within a private held company. Bitcoin is a privately held company, okay? It is a company that managed, I wouldn't say privately held, and I take my word back because it's public traded company. So it's a shareholder held company, right? It is by this board of directors, and people are in charge of that entity and making sure that it's doing the right thing. But it is controlled by them of an entity, and to transact and making sure that the transactions are so accurate, and you cannot just subtract or add without rules and regulations. So they can create a balance between buy and sell. Then they want you to use that digital invisible to transact on your real merchant account. So this is where Tesla comes in, right? Tesla said that I'm going to allow you to buy my car with Bitcoin currency. And remember those things, remember that happened, right, in 2021? And remember how Tesla's stock just shoot up because suddenly that cryptocurrency kind of treating something really important in the merchant world. But that cryptocurrency really is meant to replace or to provide more convenience than our real currency. So with that said, and these currencies, Bitcoin, okay, they are a currency that guaranteed if you buy one, you get one. And if my currency is doing good, you buy one, your value become 5. So based on the transaction, based on the people pouring in money and the buy and sell, they create gain and the losses. When that gain and losses come, it's reflected on how your value holds as a shareholder when you buy their currency. And the cryptocurrency is an intangible digital token, digital thing that is recorded using distributed ledger infrastructure, often referred as a blockchain. Okay, distributed ledger technology, and I put the definition here because it helps us, refers to the technology infrastructure and the protocol that allow simultaneous access, validation, and record updating in an unchangeable manner across the network. So that means that nobody can create anything. In our real currency world, and the Federal Reserve is really the one sort of like a cryptocurrency's board of director. And the Federal Reserve can print currency, right? So we have inflation. Now our inflation is so bad. And didn't you realize that? I know people don't use real paper work, but if you go to bank, you draw money, and you will find out you got a new currency more than ever before because there is a printing going on our currency. But this, what it says is that blockchain will maintain the balance. And they were saying that we are not going to print the currency like with no good reason. We're only going to print it. Productions is more. So it is a virtual world currency can literally has potential to replace our currency, but it's not government backed. It is not a government, it's not a Federal Reserve. So there is no guarantee that you put in 250,000, they're gonna have Federal Reserve guarantee that if the bank closes, you got the FDIC insurance. You don't. And if you invest in cryptocurrency, you lose. That's the name of the game, because at the end, it is a company that served a group of shareholders, right? So with that said, let's look at one example what Tesla did. Tesla bought $1.5 billion worth of Bitcoin in the early 2021. And in March 2021, and Tesla sold the Bitcoin and sold for a gain because they bought so much, the market was getting excited, and then they sold it. They got a $128 million gain. So that went to Tesla's first quarter financial statement and made shareholder really, really happy. And in December, and Tesla reported 1.99 billion worth of Bitcoin on their balance sheet at the end of 2021. So listen to this. They reported the purchase price of the Bitcoin on their balance sheet, right? But they also did an impairment deduction on the balance sheet value for the Bitcoin. So what that means is they were saying that, okay, my Bitcoin was, worth, let's say use simple dollar, worth $10 million. We bought for the 10 million, and because they sold some, right? So they got another one coming out, they got less on the balance sheet. But they're saying that Bitcoin dropped the value and it's not worth of anything anymore. Now my 10 million become 5 million. So Tesla brought the other 5 million into the income statement and reduce the profit, and so they don't pay as much as taxes as they would otherwise do. So did you hear me? They did not sell the Bitcoin. They did not sell the virtual currency. They left it on the balance sheet. They did impairment testing valuation, and they reduce the value. They bring the difference over to income statement as the impairment write down. And then there is a $5 million deduction for Tesla. So with that said, this is how Bitcoin jumped when Tesla bought them. Okay, so they just shoot up, and the people got more confident, thinking, oh, wow, I can actually now, using Bitcoin to buy Tesla. It's not anymore. They took that up, they took that back. But that was that 1 year, the 1 year event in history of Bitcoin. And the Bitcoin is still the #1 virtual currency that on the market. And I know a lot of people lost a lot of money in 2022 for buying different kind of cryptocurrency. And even when you buy stocks and you really want to look at the companies that's more reputable, more stable, and with virtual currency, I'll tell you, and it's more important than working on reliable and the long-term and a more stable cryptocurrency company than those ones who come up. And there's also virtual currency come up for puppy grooming services and the puppy meals and stuff like that. Those are just doesn't last the way that we see them to last, because it is not something that can sustain. One day, government has to take over one of those virtual currency company to back them up like a real currency. That's the only way, I personally see how the blockchain technology goes. Okay, now I want to summarize this for you before I get into drawing chart. I'm going to draw a chart for you and answer your question of, I have extra money, Ying. What do I do right now if I want to invest in virtual currency? And I want to show you how your deduction would become, so you know exactly which method you choose. So the rules: acquired digital asset should be accounted at cost. That word just means that if you bought Bitcoin for $100, and you should just document that as $100, subject to subsequent impairment testing and write down. And your $10 Bitcoin and you bought is your investment. But let's say if the $10 become $1, and then is subject to the impairment testing and write down, means that you can write down your dollars from 10 to 1 because you lost 9. Okay, when the asset is impaired, the company must write down the value on its book. See, Elon Musk is doing the right thing, because Bitcoin dropped in value on December 31st, 2021. So he wrote it down, and it reduces taxable income. That's the consequences when you write down the impairment loss of your intangible asset, and then you reduce your taxable income. However, the value of the asset cannot be written up if the digital currency goes up in value, or a previously wrote down intangible asset survived, recovered, come back. So that is where you see that when you go down, you reduce your income, reduce your taxes. But when you go up, and you cannot do anything until you sell. You cannot recognize the gain until you sell. So this would be the same slides, and I'm just reiterate, that's the cost method for cryptocurrency that we were talking about. Okay, investing in cryptocurrency. There's two ways to invest. You can't think of a third way. There's two ways to invest. Number one, you invest in cryptocurrency as part of your intangible asset for your company. Okay, so you move money from your company account to your cryptocurrency purchase. That's one way. The other way is you buy it on your personal name. Am I right? You probably just have these two kind of books that you're doing. And you may say that, oh, I'm fiduciary, I have other people's money with me, and I want to do that. Then that's your business again, right? Because you are conducting yourself as a business, investing business, and that's why you're doing that. So here, you want to understand that we are going to digest those two ways into details. And let me switch myself over to the writing board for you, because that's how you can see how that can be, how you will choose which way to invest in cryptocurrency, right? And our goal is to, after this webinar, and you make decision on your own to know exactly how to invest in cryptocurrency and what kind of checkbook you're going to use to do that. So let me go into this board. Let me make sure I have my writing board is up in here. Yes, it is up. So let me share. All right. So this is a whiteboard, nothing on there yet rather than today's date and my email address if you'd like to email me. And I am pretty good with getting back to people on the email you send me. And we are, our office opens 6 days a week. Saturday is my regular work day. I don't even remember, I had Saturdays that, I always work on Saturday. I'm pretty happy with working 6 days a week. But here, what we are talking about on this board is actually a view to see how the investment can play out at your with your bank account, basically. So we want to say that you now have money, okay? You have free dollar you want to invest, and you decided to invest in cryptocurrency. So there's only two ways to invest in cryptocurrency, folks, right? One is you investing in through your company account. And then the other way, you invest through your personal account. The reason we bring this webinar out today, a lot of times, recession is here. We don't have to sugarcoat that, it's here. But when recession comes, and a lot of people will lose a lot of money. And that's very normal. But let me tell you the other side of the token. A lot of people will make a lot of money. And I say that because in the CPA firm, you can imagine people who are doing well, they come to you, right? They come to you because they made money. They want to know what to do. So we see the up and downs of the economy just through our firm's window. Just our 12,000 clients would bring us the small business world. I don't know about Elon Musk kind of companies, and I don't do their accounting, I don't do their taxes. I really don't have a lot of understanding of what they are doing. But I had 5 years experience with Wells Fargo when I was vice president of controllers. So I have seen bigger books. And now I see every day a small business sector of the economy. I know this recession we have today, it is not for the banks. It is actually for the grassroots. It is for us, for people like you and me. And remember, if you take this opportunity seriously, don't take it as a downturn and your life becoming worse from today on. But if you just take another attitude, look at what you have and start to invest. We want to talk about cryptocurrency because I don't think it's going away. It will not go away. It will be more and more convenient, more and more mature. Some government, some entity, some structure will come around to regulate it, like Federal Reserve. And then suddenly you will see this kind of things happening with the government. You know, of course, if it is government taking control of virtual currency, then virtual currency will be a thing. So investing in the reputable virtual currency, it is a thing I am thinking about, and it is also a thing that you should think about. But let's talk about how that works for us. What if we invested $100,000 and what happened if we lost it all? Yeah, we're probably gonna lost it, right? We maybe will, right? But so you don't want to invest $100,000 of yours if you only have that $100,000 to drink coffee and eating food. Don't do that. You're only gonna invest your free money. You see how I wrote there? The money that would not impact your lifestyle. That's when you're gonna invest. That's when you're gonna risk, right? So if I have a company and I decided to invest $100,000 into cryptocurrency. Okay, so what is my transaction when I wrote the check to Bitcoin? What I will do, my journal entry is, of course, intangible asset, right? 100,000. And I will pay out of my bank, company bank, 100,000. Then I bought that in January. And December come, I'm about to give my book to community CPA to do my tax return. And I read the market report. The market report says that the Bitcoin has dropped in value. My $100,000 investment now in reality is only 40K. Now what I'm going to do? So this is what Elon Musk did, okay? So what happening is at the December, before we submit our financial statement to community CPA to run taxes, and I am recognizing that 60,000 imperative deduction. So I will reduce, okay? I will reduce my income. Am I right? It is not exactly debited income, but I could debit for a Bitcoin loss. It is an income statement item. So that will be 60, okay? And then I will credit what? I will also reduce, in this way, credit is not increased. I will also reduce intangible asset. Because that value went down to 60, went down to, we write down, that's went down to 40K. What am I doing? So I reduce that, no, at 60, you're right, 60, folks. Because once I put in the 60, my intangible asset become 40K, right? That's the result, it become 40K, but I can write off 60K. So if my tax rate is 21% times 60K, and that would be my, that wouldn't that be my tax saving? So that's 60K, okay? Times 21%. So my tax saving is $12,600. 600. So folks, the one who lost on virtual currency this year in 2022, I want you to examine your asset. If you didn't sell it, value just went down because you did a market report and you know what that is, then you can recognize the intangible loss. Even though you didn't sell it, you can still save your taxes. But what if you sell it? Then if you sell it, you have it. It is not imperative testing result. It is just the result. It is just what happened, and you got an asset. You bought 400,000, now worth only 40. So then, of course, it's still deduction. So what happened? And on January, you haven't even filed your taxes yet, but your intangible asset went up in value to 200,000. So what's gonna happen? It is sitting on your balance sheet as 40K. Do you increase that by 160K trying to report income on that? Of course not. Only because market going up, you don't recognize gain. It's not like impairment testing, you recognize loss. When it's gain, you don't recognize gain. You only do that when you really sell it. But when you sell it, of course, you're gonna recognize 160K gain, right? So this is where the company's treatment on intangible asset, including Bitcoin. So what really shocking or maybe surprise to a lot of small business owners is that we didn't realize that, even if I didn't sell it, I could recognize impairment loss. Yes. So that is what you need to learn from this time you listen to our webinar. All right, now let's look at what if you say, well, I don't have a company to buy Bitcoin. I just gonna buy it personally, which I already did. So you bought it personally. And do you know that there is 2 scenarios under personal in terms of your gain, in terms of how you treat your Bitcoin or your in cryptocurrency transaction? So one of them is day trader. The other one is what? It is just a regular folks, right? For passive gain and the loss. So who are the regular folks trade for passive gain and loss? And if you are the person that goes to financial planners and give them the money so they trade for you, and you make some dividend income, you make some capital gain, sometimes it's a lot, capital loss, sometimes it's a lot. Those are passive. That means that if you have a loss and your capital loss can only allow $3,000 a year deduction. So if you happen to be high and you lost 1.5 million, that's gonna take you years to deduct because you can only deduct the 3K a year. I know that, extreme talk, because in reality, you will have gain. When you have capital gain, it will offset the 2.5 million loss. So it may not last forever, but if you don't have gain, you just have the loss there. For example, you just lost everything. You no longer have money to do anything else. You just lost everything and you lost all of it. It doesn't come back. Then you got this $3,000 deduction every year. I don't think you will be able to, deduct that faster than what IRS allows you. Then maybe you should participate in an election and figure out who is going to be your president and talk to the president to see whether they can change the rule over here, change 3,000 per year to $3 million a year. Then we don't have a limitation anymore, right? You can deduct it right away. And that's a long way to go. But there is another kind of deduction that normal folks can do, which is day trader status, mark to market. To simply explain mark to market, I would say that because we have this $3,000 limitation, you're doing it passively, but there's people are really doing trading daily, and they're really occupying majority of their time in trading activity. So they're like doing a business. That's their business. And you ask, if you ask, okay, how do I know I'm a day trader or I'm a not day trader? So a lot of time there are court cases out there. And if you have a full-time job, that takes you from 8 o'clock to 5 p.m. and every day, and you declare that I'm a day trader, that's a little hard because most of the trading happens during the day and you are working your other job. And how could you declare that you're a day trader at home? But this happened a lot during the pandemic time because a lot of people are working at home and they accidentally become day trader because they are working at home. So they were trading while they're working for their employers. So things happen, right? So there's a lot more day traders during the pandemic years than ever. When you become a day trader, and if you are a mark to market, you made that election, what happened to you is your loss in the stock trading, it will be offsetting all of your gain under your name, like your W-2 gain and your interest income. So the losses no longer have restrictions of that 3K, of that 3,000. So you don't have that limitation anymore. You can write off your loss 100% in 1 year. If the loss is so great, you had a negative AGI, no problem. And you can continue carry your loss to the next 20 years in your life. So then that deduction is a lot faster. Am I right? That is the market election the day trader can take. But you may say that I was a day trader for 2020, 2021, 2022, but now I found a job. I don't think I'm a day trader anymore. Now what am I going to do? I already elected to be mark to market. And always remember this, and I have been talking to a lot of people, they are not really clear about the mark to market. When you elect a mark to market, know that you were electing by account. I mean, by account means your brokerage account. So you may be doing trading at E-Trade, TD America, and Robinhood, right? You may be doing them all in 3 accounts. But your mark to market is very possible to be just for the Robinhood account. And your other 2 account is not mark to market. Your other 2 account are still a regular folks trading passive gain and the loss. And your regular account that is not mark to market would handle long-term gain. Long-term capital gain has a lower rate, folks. They are not taxed as a regular income like those short-term gain, right? So the maximum tax rate is only 20%. So with that, you see, then when you decide to not wanting to be mark to market, you want to cease your status being day trader, and you simply need to close that mark to market account. And when you do your trading, you're going to do the one that is not elected to be mark to market. So with that said, you are clear. You can in and out of trader status by making sure you manage your brokerage account. When you are mark to market, you don't receive 1099-B. You should receive 4797 statement. And you may tell me that, oh, well, how come I'm still receiving 1099-B? That is because you did not tell your brokerage company that you elected mark to market with IRS. And so many people did the election already and did the election in April 15, 2022 for a year of 2022, right? You already did that. change your brokerage account from regular investor to day trader. You need to contact your trader account, your brokerage account to change that, because December is coming up, folks. If you don't change that, you're going to receive 1099B. That made it so hard. It's impossible to file your numbers properly with mark-to-market status that you already elected. And some folks also say to me that, oh, Ying, April 17, I put in my mark-to-market, and April 15, I put in my mark-to-market election. I never got a confirmation from my IRS saying that, hey, your status got approved. Mark-to-market election, the one you submitted in April, is automatic approval. It doesn't have any letters coming back to you. Normally do not, unless you made an inquiry, okay? And the IRS assume that you know what you're doing. You made election, you need to call your brokerage company and to get that changed. So now, as your personal account, and you want to buy cryptocurrency, and you lost the money already, and you did a mark-to-market, and make sure that your 4797 is going to come out. But one thing I also want to tell you, the cryptocurrency side of the investment log and the report and the statement is not mature. And the IRS has not regulated cryptocurrency folks to do what E-Trade is doing, to do what TD America and they are doing. So the 1099B, generally speaking, doesn't exist with those small and Bitcoin or cryptocurrency companies. Bitcoin is a big company, but some of those brokerage firms, they are specialized in the cryptocurrency brokerage business. They're not significant enough that to invest in these type of reporting. So they are not doing that because IRS did not require that. A lot of people don't have anything from the virtual currency to file their 4797. If they don't give anything, folks, if you invest in cryptocurrency and you don't get anything for 4797, but you already elected to be a day trader, then it's up to you to come up with the record. So you know what you trade, you know what you put in, what you get. So you are responsible for getting those numbers right. And on the tax forms, the IRS already give you the platform what to do. So you just need to follow 4797 to get your number in properly. So this is where, when you are doing a trading business as day trader and you don't get 4797 from a cryptocurrency brokerage firm, and that is understandable. So that's why you need to do that yourself. But if you're doing tradings and other tradings, okay, and you elected a mark-to-market, this is where you need to make sure you call your brokerage firm to get the statement out for you. Now, if 2022 April was the first time you did election, and 2022 gonna be the first year, the very first year you file as a day trader status, folks, and you want to make sure that and you know what day trader status the first year requires. So there is 3 things you're gonna see on your 1040 that you want to make sure that it happens. So number 1, on your 1040, because you did the election in April of this year, so when we arrive 2023, you're gonna be filing 2022 return, right? So the first, you want to gather 4797 report for all of your tradings, including your cryptocurrency. Number 2, you want to fill up a form 3115, and this is the one that only requires for the first year. And this one, it's gonna require our year. 4797 is going to be required every year, but the first year will be the hardest because you want to make sure that you are getting it. If you don't get it, you want to make sure that you know how to do it yourself, to come up with the transaction numbers, come up with the amount, so you know how to fill up 4797, right? And the number 3, folks, so important. That 3115 is not filed together with your 1040. It is a separate filing requirement. So you want to file 3115. And don't be silly thinking, oh, I filed my 1040 and I'm done. No, that 3115 doesn't go with your 1040. You need to send it out separately, because if you use TurboTax, folks, you don't have a way to send it out. You need to print it out and walk to the post office. Okay, so this is where the 3 things that we want to mention to you, because this is the places where people make a lot of mistakes. And things that, coming to us is already too late. So I just got called yesterday, a taxpayer, and wanting to do mark-to-market accounting tax for 2022, but they didn't file election. They didn't really submit the election when we submitting the 2021 tax return back in April. So that, and then the question is that I didn't file my election, and I want to be on mark-to-market. So you cannot be on mark-to-market if you did not file election in April of 2022 for a year of 2022. But we also have a taxpayer that and actually did file, but this was like last year. They filed for 2021. In April of 2021, filed the election, but 2022 come around, and they, the person did not know that those election was automatic approval. So he think he didn't get it. So he was calling IRS. So IRS tell them that they never got it and they didn't receive it. But the taxpayer has a paper mailing receipt, shows that it was gone to IRS before April 15 of last year. So 2021 still qualified to be mark-to-market, and we just go ahead and make sure we change the brokerage firm. We go ahead to make sure that we file 3115. So we still do things regularly as long as we have the proof that we filed extension timely. Remember, and IRS not gonna tell you, oh, I got your mail and you're approved. That is automatic approval. So it's just you need to have proof that you have filed that properly, timely, in order you to declare to be a day trader. So I kind of, using cryptocurrency topics, I kind of give you some ideas on the day trader. So as a cryptocurrency, if you're a day trader, and if you are buying the cryptocurrency, say you buy it for 100,000, at the year end in December, you didn't sell it, right? You didn't sell it, but because of your day trader, so it is actually will count the last day value as you sold it. So you actually would reduce, you would have a $60,000 loss, just like the company did for impairment testing. Because mark-to-market means you mark your final value of your stock as market on the last day of the year. But next year come around and your book will reflect the 40,000 as the Bitcoin value, and you cannot use your 100,000 because you already write off your 60,000 as expense. So those expense, someone also asked me that, okay, Ying, I wrote off 60,000 on my 4797, and my W2 was 60,000. And what does that do to me? That make your AGI 0. So the 60,000 losses from day trader offset 60,000 your W2. So you got a 0 taxable income. But when they pay your W2, didn't they withhold taxes on you? They did, right? Your employer did. That taxes, that income tax will come back to you as a refund. And because your income level dropped to 0, and then your child tax credit, your earned income tax credit, bunch of government assistance program would come in. So you actually get a lot more refund than you ever thought of because you lowered your income threshold. So this is kind of the big picture, folks. I really hope that you hear me, understand what I am saying. When you buy cryptocurrency, you buy it under the company that gives you that benefit. I call that Elon Musk benefit, okay? But when you buy it under your personal name, you want to evaluate, are you a day trader or you are not? If you are not a day trader, don't do mark to market because IRS do come back to challenge you. IRS come back and goes, how many trade you have in a year? And you say, well, I had I do it part-time. I only trade 1 or 2 trade. I watch a lot. That's not a good sell. IRS don't buy that. If you look at the court cases IRS had, those traders who reaffirmed as a day trader, they literally trade every day and every week, trade a year and millions transactions. So you do have to prove that that much of energy and time is put in the day trading. That's why you are a day trader. So like I said, I know a lot of people qualifies that during the pandemic year, but maybe in 2022 and 2023, you got a new job and you don't do that much anymore. Then make sure you close it. Make sure you terminate it. And I already mentioned to you how to terminate that. So you want to make sure that you transition yourself back into a regular folk and don't want to be on the day trader place that you don't qualify, because that is ultimately a red flag for audit. IRS knows how much you trade, folks. Every trading you do, it has a piece of paper with IRS. So some traders, when we are downloading information from IRS, for some traders, do you know that it takes literally 6 hours to download? That's how many things are in there. And if you don't trade, you don't need to speak a word. IRS knows that, so you don't need to think that nobody know, and they will know. They come to you, they take away your mark to market, then you're going to end up paying back so much taxes. It's not a happy event. So I want to make sure that you are being flexible for yourself. If you are a day trader for 1 year, fine. If you are a day trader for 2 years, okay. But if you're not day trader for the 30 years, you start changing it. And our firm, we definitely can help you to go through the step to change it. But just be very aware and what you are doing, and know that if you are a regular folks and you have these capital losses that you cannot deduct, maybe you start working on other passive businesses, like getting a real property, renting it out, and combining your other gain with this loss so you can write them off. So there's many other ways to fix and cure the $3,000 limitation. But to be a day trader, there's a requirement, and to invest in the company, and that is require you to write a company check. So I hope today's talk really helps you a little bit, and knows that we're here to give you our knowledge for free. And we really would be appreciating you to let other people know about our channel, and send our channel to other people, and let other people know that they can learn things, 1 or 2 things here, and increase the subscribership is one of our goal for this year. And we also like you to send us in things that you really love to know, and then we can answer that question. We can answer that topic and put out new webinars for you. All right. Okay. And I think I'll say goodbye to you for the weekend. And I hope you have a big plan for the weekend. It's beautiful fall. We can count with our fingers how many good weekends we have before winter really hit us, right? So let's make sure we enjoy the time, and good to see you. And I'll see you again on Tuesday for more sharing. Talk to you again. Bye-bye.